there's this funny 4-letter word, W-O-R-K, right?
Careful.
That hasn't changed, in my opinion, ever.
With somebody facing this market today, what are some things they need to be focusing on to survive this thing?
87% of home buyers take their advice to who to apply for a mortgage from either the realtor or the home builder that they're buying a house from. Get up early, go to bed late, and work half days. Pick any 12 hours you want and work half days, right? His point was, right?
Yes.
You only need to do 12 hours a day. You can call on people who are in real estate, or you can call on people who sell real estate.
Friends and professionals, welcome back to another episode of the Model Lending Podcast. I'm your host, Alec Hansen, and today we're bringing on a living mortgage legend, Brian Hale. Over 40 years of mortgage acumen lives in this guy's brain. He has handled up cycles, down cycles, and has a tremendous career and perspective on how to handle this crazy market, how to win, and how to evolve. Buckle up, you're gonna like it. Let's kick it off.
Welcome everybody back to another episode of the Model Lending Podcast. I'm your host, Alec Hansen, but you know that because that's obvious. I am sitting here today with another legend, which is incredible. Brian Hale, who has one of the most diverse and experience-filled backgrounds in mortgage lending that you could possibly have today. I'd argue you're probably up there at the very top.
Well, first of all legend means is I'm old. That's what I decided.
Well, but not dead yet. That's always good.
No, exactly. That's the positive part of it. But legend really simply means you're really old. That's all. Well, that's all that means.
So how many years, Brian?
It's my 41st.
41st year. And what I'm excited about today, and this conversation is going to be pretty wild today, everybody, because Brian is one of the most straight shooters in lending, period. You always has been. And I think we need that now in a market that is very confusing for a lot of people. I think someone needs to come and tell you how it is.
Right.
And so right now you're in mortgage and acquisitions. You're running your own consulting firm.
I have my own consulting firm, Mortgage Advisory Partners.
Yep.
It's a small boutique firm. I have, a few employees, and I have a number of subcontractors wrapped around me. But the business is really comprised of 3 areas. And I didn't go into it for M&A, but as you can imagine, there's a lot of opportunity today. And some people look for folks who have actually been operators to kind of help assess both targets and or buyers right through the process. And so M&A is a big piece of my time today.
Yep.
I do general advisory as well for organizations, large, medium, small, independent mortgage bankers, banks, as well as realtors, home builders, fintechs, proptechs that are in the business around mortgage banking. Some of those folks think they want to get in mortgage banking today, which I try to provide advisory around that as well. It's like, what, you don't have enough brain damage? Come on in.
Yeah,
the water's great,
yeah.
Right? And so I do advisory on that. And then last but not least is really an output of the first 2 segments. I actually had a CEO. I didn't start out this way, but I had a CEO about 3 years ago suggest to me, because I've had the good fortune to work with a lot of really talented executives in my life and folks at all levels in sales and ops and legal and finance and you name it, I would help my clients acquire talent from time to time because I got brought in to either assess a situation or to fix a problem. And in about 80% of the cases, the problem, in fact, might have been the person running the unit. And it wasn't because they were bad, but the unit might have outgrown that person's capability, right? So they were a victim of their own success of growing the franchise.
Happens.
Or there was something that just wasn't clicking correctly, or they didn't fit into the culture, or whatever the case may be. And so I would reach out to people that I know or that have worked for me in the past, which is about
everyone in the mortgage business,
about half the industry.
Yeah.
And say, hey, are you happy? Call up Alex, and there's this opportunity. Do you want to talk to him? Sure. And they would hire them. And a CEO said to me, is there a reason why you don't get paid for that?
Yeah, good idea.
Yeah, it's a great idea. That's how you build a business plan, apparently. And so a fair amount, not a ton, but on an ongoing basis, I do a fair amount of executive placement, typically at the C-suite level or senior, like division head, production head, finance head, ops head, type areas.
Yeah.
And so that's really the third primary area of my business today.
Well, Brian, why I'm excited to have you here today to talk, because with all this experience, I think you have a great insight into cut through the BS, share everybody what we're dealing with, and help everybody see the forest through the trees. And what's great about this presentation is that you actually have some slides for us, which is incredible. So for those of you that are audio listening only, you're going to want to go to YouTube immediately and figure this out, because we're going to show some stuff right now and we're going to talk to it. So just let's buckle up and ride, because I think we need to set the foundation of what we're dealing with in order to see how to get through this insanity.
I think it's a great idea.
All right. So What do we got? What are we looking at?
All right, so look, these first couple of slides, and I'm going to go through these fairly quickly because I don't want to spend a lot of time yakking about slides. You know, I always refer to slides like these as cartoons, but sometimes they're helpful to make a point, right?
Sure.
I mean, let's just state the obvious to start with, which is this is like the most significant rate rise on record, right? In terms of the steepness and the kind of velocity of the climb. It's just been nothing like it, right? And certainly not in most people's memory in this business. I said I've been doing this for 41 years. The good news is for about 40 of the years, I've been on everybody in the business has been on a slow downhill run.
Running downhill, market, baby.
Right? Rates have just been, they pop up once in a while, but overall, they've been trending down for 40 years. I figure I was just born under a lucky star, that I had the good fortune to get in the business during that period of time. But this period of popping back up, think of the number of originators who've joined the industry in the last 10 years.
Oh, yeah, there's a ton of them.
20 years.
Yeah.
Have never had to deal with rising rates and or how to explain discount points to a buyer or a seller or why the seller should pay discount points. It's a foreign concept. We've been selling a par price kind of forever. So anyway, this is a predicate. I'm not really telling anybody anything you don't know. And oh, by the way, this is probably not the uplifting part of today's conversation, right?
We got to start with reality.
So this is a little more grab the lapels, shake the lapels a little bit and go, hey, there's a few things going on.
It's happening. And
it's going to be a theme, in my view, through maybe this entire conversation. Everything in our business has either changed, is changing, and oh, by the way, if you're not a big fan of change, I'm not personally in my personal life, right? I'd go to the same restaurant and have the same entree 40 years in a row if it was left to me, not to my wife. So I'm not a change guy, but the reality is change is upon us, and it's likely to accelerate dramatically over the next 5 to 10 years. So just the obvious piece is rapid increase. Let's go to the next slide really quickly because this will explain a little bit. If you look out here to this right-hand side, that big red V, this represents actually the spread. And this gets a little technical, so forgive me on this.
Yeah, let's go though.
Right? Mortgage rates are both a function of the cost of funds, typically expressed as the 10-year treasury, right, as a guide. And then a slight spread above the 10-year treasury rate, which historically has kind of moved along. And you can see the trend line of that. And actually, the pandemic, you can see the spread came way down. Thinned out because there was a perception that at one point we were going to go to negative interest rates.
I remember that.
Right?
Yeah, everyone remembers that.
Like the rest of the world at the time was negative interest rates. And then all of a sudden spreads have exploded to record highs. So one way to think about today's interest rates, and it's the reason why you don't have much premium pricing in your pricing today. Right? The reality is that investors in bonds and mortgage-backed securities would like those securities to live over a period of time to match up to liabilities they have. Big insurance companies. Foreign investment funds that are supporting the retirement funds for their entire country, those kinds of things. They're looking for predictable yields. Well, today, what we know is, as we touched almost 8% here just a couple of weeks ago, right? Rates may have peaked. Who knows? Maybe they haven't. But it sure looks today like they may have peaked. And what do we think is going to happen if rates drop over the next year and a half to all the loans we made over the last 2 years? They're going to get refinanced out, right? So they're going to shorten the life. So bond investors today are looking for a premium, essentially a way to get paid up front for that very risk.
100%.
And until that risk begins to abate, it's going to be very difficult for us to bring these spreads back to more normal levels. If spreads were at normal levels today, interest rates would be actually today 100 basis points lower in interest rate today if you had more normalized spreads today over the treasuries, right? So this just gives you a sense of what's propping
what
rates,
else is affecting
even though rates have come down. And we've seen just in the last 2 weeks, we've seen this 60 basis point rate improvement right over that period of time. As I said in a commentary on one of my LinkedIn posts 2 days ago, good news is rates are down. Bad news is they're not down enough to really drive the market to a substantial level. Now, all things being equal, I'll take lower rates if I've been a mortgage banker. And secondly, margins tick up a little bit during this period of time when you see lower rates. All good for the industry. Probably not good enough to get us where we need to get. All right. Let's get to the next one. And this is really a pain slide, right? This is...
Let's bring the pain.
Annual mortgage cost as a percentage of household income And you can see, I get asked this all the time. I got interviewed on Monday by Housing Wire again. And I get asked all the time, how does this compare to 07, 08, 09, right?
Yeah.
The big recession.
Everyone's asking.
The cataclysmic disaster in the mortgage business. And I can tell you that this period we're going through, it's not even close. It's far worse than anything that got experienced in 07 to 10, right? In that period.
Yeah.
For the simple reason. People were still buying and selling homes.
Absolutely.
They might have been buying a foreclosed house, right?
That's right.
People may have lost their house, and those were all tragic situations.
Yeah.
But today, when you look at 45% of your income to buy an average house, real estate values are up 40% in most of the country in the last 2 years.
Yeah.
Interest rates are up 2.5-fold, right, from where they were. You put those two together, most Americans today likely could not qualify to buy the house they're living in.
Yeah.
Right? So you've got this lock-in period with low interest rates where people aren't listing their house, combined with very challenging first-time homebuyer economics in terms of buying that first house, which allows everybody else in the ladder to move up. So this slide, even though it compares, back in 80 when I first started in the business, this is really a dramatic slide.
Let's stay here for a minute, and let's kind of unpack. I'm curious for your perspective because there's a lot of commentary. Well, if rates come down, does it solve the problem? And what's your take on that?
Yes, if they come down enough. So just think of it this way. You're a homeowner.
Yep.
A good fortune to be a homeowner.
Yep.
If you had a mortgage on your house today at 2.5, 3.5, or let's say just under 4, which by the way, today
there's a lot of people.
80% of Americans with a mortgage have a rate under 4%.
Yep.
That guy or gal is not moving unless they had to.
Yes.
Today, right?
Correct.
Because they're going to give up a 3. You have to sign up for today 7.5.
Yep.
Right? And they're going to pay 40% more for the same house they're living in today. Yep. And then maybe they want to move up because they had a kid, they had another kid, whatever, they need a bigger house. And so the combination of those issues, until we get to a point where sellers are willing to transact and list their house more frequently, which will have, in my view, somewhat of a depressive impact on sales price increases.
Yeah.
Because you'll have more supply.
More supply.
More supply should moderate the relative increase. Today, people are challenged to buy a house, but property values are still going up dramatically in a lot of markets because there's nothing on the market, right? So until we break the seller lock-in piece, my personal opinion, and I'm not an economist, right? I once got introduced as an economist, and I got up on stage and said, "This is a terrible mistake," and they said they had it labeled as noted economist.
Oh, excellent!
And I said, "Not close, bloated economist, maybe, right?" But I'm not an economist, but my own view is that until we see a 5 handle on the front of 30-year fixed,
you're not getting
and certainly preferably a 4 handle, and I think you could get to 4 within the next couple of years, but a 5 would massively change the market in terms of affordability and a seller's willingness to trade a 3 7/8 for a 5.
Yeah,
that's a reasonable.
Now they'll do it.
That's a reasonable spread that you may not love it, but you could at least do it, and you'll list your house as a result. That'll free up the market. I look, do I think 6.5 is better than 7.5? Do I think 7.5 is better than 8? Of course.
Yeah.
But those are all relative terms. In order to get to a point where we dislodge the market, we need material downward pressure in rates. And oh, by the way, we need buyers of mortgage-backed securities. The Fed has stopped buying.
Yeah.
Many foreign countries have stopped buying, right? Banks are very judicious about buying mortgage-backed securities because of things that happened in the little mini banking crisis we had earlier in the year, right?
The mini one.
Right, so nobody wants fixed-rate securities. Until those buyers come back in or the government becomes a buyer again, be it the Fed or somebody, we're going to be challenged on the spreads. We're going to be challenged on this issue.
Okay, so let's
oh, by the way, can I add one last thing?
Yeah, no, absolutely.
Jobs have to slow.
Okay.
You still have 1.6 openings for every one person looking for a job in the U.S. Unemployment remains really sticky low, which you would think is a good thing, and it is, but it's an inflationary thing. Yeah. And bonds trade as a expectation of inflation. And so until now, that's what happened last Friday. We got a below expectation jobs report. We need a few more of those below expectation.
So now that we kind of have a little bit of a view of the market, and I know there's another slide coming up, Mikey, we'll come back to it in a little bit, because I want to kind of, you've also had an incredible career leading originators, and I know you have a heart for originators, because I can hear it when you talked about what they're dealing with and how they're surviving this market and what they're doing. Right. Let's talk about them for a second. Now that we kind of know what the playing field looks like a little bit, how are they going to survive right now? What do they need to do in your perspective?
It's a great question. So first of all, let me just address my heart for originators. I've had a really, knock on wood, really lucky career. I've been in the right place at the right time to get promoted a number of times. And so I've been a CEO, a board member, a president. Yeah. I've run some of the biggest channels and companies in the industry. But remember, I started as a retail originator, 1982, as a retail originator trainee, right?
So good, dude.
It's so good. Was an originator for 3 years before I ever became, a branch and a producing branch manager.
Yep.
That's kind of where I started. And I tell people this all the time, and I mean this with absolute conviction. Of all the titles I've ever had in my career, the title salesman is the one I'm most proud of, right? Because I believe in any industry. I don't care if it's mortgages, cars, you name it. Nothing happens until somebody sells something. And that's where it all starts. It doesn't diminish everybody else. It doesn't diminish ops. It doesn't diminish the finance team, the marketing team, or anybody else. But until somebody sells something, nothing else happens. Everybody else can go home, right? So I'm really passionate around great salespeople. And when you see great salespeople, it's just so obvious. It just leaps off the page at you, right? When that happens. So to answer your question, right?
Well, before you do, because one of the things I want to continue to set the ground on, because we talked about this right before we went live here, there's a lot of mortgage salespeople that are leaving the industry.
There are.
And what was the numbers you were saying?
Well, 85,000 have left in the last, call it 12 months, give or take. That's according to Ingenious.
Yeah.
Jeff Walton and that group that put that out. And the second thing is, we all know we're in renewal season.
Yeah.
Right. I have my younger son runs state licensing for a competitor of yours.
Yeah.
And this is not his favorite time of the year. Although I was talking to him just yesterday, and he was reporting to me that this year getting through the state agencies for renewals is much easier. Why? There's a lot less people trying to renew their licenses this year than there have been over the last 2 years. Now, what you saw in 20 and 21 was this rapid increase.
Yeah. Abnormal.
Right, to historic levels. Yes. And now you're beginning to normalize again, where non-bank originators, because a lot of people in the banks don't have to be licensed.
That's right.
But non-bank originators now are approaching about 100,000, a little under 100,000 in NMLS.
Yeah.
Right, that have actually closed a loan.
Yeah.
So it doesn't count, somebody licensed their PA or they licensed their processor for some reason. Right. So take those away and look at originators that actually closed at least one loan in the last 12 months. Mm-hmm. There's about just under 100,000. My own view.
Yeah, where do you think it's going?
As people start having to pay for renewals over the next 60 days, I think you drop another 20,000. I just, when you think, it sounds like a big number, and it is a big number, but not when you think about how many companies and mortgage brokers there are in the country.
Of course.
It's less than one per company that might go away.
Yeah.
But what it means is people that are going to survive long term are going to have a lot less competition around them soon, if not already.
Well, so that's kind of the lay of the land.
Not the uplifting part of our conversation today.
Yeah, but you know what? I like this. I like starting with what A is A. You got to start with what's happening around you. There's a lot of loan officers, and I even see some mortgage companies that I feel like their head's in the sand. And I even have some who I'm very close with that are like, I'm taking a break. I'm chilling out. Yeah. And I think that's just a strategy for disaster. But with somebody facing this market today and looking and understanding what's going on, what are some things they need to be focusing on to survive this thing?
Yeah, look, I'd love to take credit for this piece of advice, but I actually heard it from somebody else a couple of weeks ago. And I think it's one of the, sometimes great ideas that are not well formatted or conveyed get lost, right? Yeah. People don't really understand what you're trying to say. And forgive me, I don't remember who told me this or where I heard it. But what their suggestion was, if you're an originator today, remember a couple of things. Still about 87% of home buyers take their advice to who to apply for a mortgage with from either the realtor or the home builder that they're buying a house from, right? Whether you like that idea, you don't like that idea, you're trying to use social media to kind of get around that construct or whatever.
Yeah, it still matters.
All good. 87% of customers are still taking that advice from the person they're working with. So let's just think about referral sources for a second.
Yep.
When I was an originator, I got trained by a brilliant guy who was the top originator in the industry for a number of years. And he convinced me, literally day one, he explained to me that, if I made 10 sales calls a day, had 2 sales meetings a week, went out and did these things, I did it 5 or 6 days a week, I would eventually get to where I took an application a day.
Yes.
That was 21 applications a day. Pull through would have been 18.
Yep.
18 fundings a month. That's make it as an originator. He had it written out that way, right?
So it's the blueprint.
I didn't know any better. I thought, okay, I guess that's my job, right? The deal, right?
So, yeah.
So, okay, I'll do that, right?
I guess that's it.
Point being is, however, he also suggested that you had to have a diversification in your referral sources, right?
So, good. I like this. Yes.
So let's start there. So whether you have 5 or 10, or you're hooked to a big builder who gives you all your volume, which I think is really scary because that builder gets acquired and the new company has a mortgage company.
You're out.
Wow, that's a problem.
Yeah, I mean, I watched originators where companies JV'd.
Yes.
And then they half their comp had to go away.
Exactly.
Or their business went away. Or their whole business went away.
Right. And so this suggestion was, think about your business today, whatever number of referral sources, however good they are or not good they are, however mature they are, so much is changing in the real estate business today with this lawsuit happening.
Yeah.
You know, COVID happened and everybody went home. You can't find realtors in an office anymore, right? Nope. You got to track them down individually. We'll talk about data on how the real estate business is consolidating rapidly. But let's just assume that all your referral sources went away tomorrow for whatever reason. They retired, they quit, they don't cut it anymore.
They're gone.
Whatever the issue. How would you rebuild your business was the point of this piece of advice that I heard, right? What are the things you would do? What data would you want to gather? What would your go-to-market approach be? What would your social media approach be? What would, how hard are you going to work? Right? There's this funny 4-letter word, W-O-R-K, right?
Careful.
That hasn't changed, in my opinion, ever since I started in the business 41 years ago. I got told by a great mentor early in my life, you want to be a success in the mortgage business, buddy? Here's what you do. You get up early, go to bed late, and work half days. Pick any 12 hours you want and work half days, right? His point was, right. Yes. You only need to do 12 hours a day.
That's it.
And look, and I know there's a lot of people on social media that go, oh, I do it in 3 hours a week, and I do all that. God bless you, brother. If you've got that figured out, God bless you. It's just not a pervasive strategy.
Yeah.
So one, I think you got to work hard. But how would you rebuild your business today? And the piece of advice that followed with it, then start doing those things tomorrow. While your referral sources are still with you, while they're still feeding your book of business, while they're still referring you deals, the worst thing you do is you grow your business.
Yeah, I'm saying,
and you broaden your referral sources against lower sales per realtor or lower sales per home community for a home builder, right? So you broaden it. Secondly, you hedge yourself against your current referral sources who might retire, who might decide, you know what, this is just too freaking hard.
Yeah.
I don't want to do this anymore, right? I'm going to go sell something else, or I'm going to...
or I'm going to take a break.
Or I'm a second income in my home, so I don't have to do this. And it's brain damage, and I don't want to deal with... I'm going to take a year off, right, or whatever. And so you hedge yourself against those pieces. Now, look, I think there's a lot of things you can do. You can identify which realtors... Today, there's data like MMI, right, or other type services, or CoreLogic, or any of these guys, where you can identify the realtors who are actually selling real estate and focus on those people, builders, financial advisors, different referral sources. What are the very things you would do? And if you had the mentality or mindset to say, I don't have any referral sources today, what would I do to go build them today in today's environment? Start doing those things tomorrow and stick to it and put in extra effort and extra work. Worst thing you end up with is a bigger, more durable business, resilient business. Best thing you do, you hedge against those issues. And the best thing you do, you make more money, right? Okay.
It's tremendous advice, Brian, because for a lot of people, what you just described is actually what's happening to them. They have lost
by default.
Yes. They've lost their referral partners, their referral partners' effectiveness has just diminished.
That's right.
Down to nothing. So what you're explaining is exactly what's happening to people too. Right. And if they want to bulletproof their business, they
do it to yourself, right? There's a Steve Jobs used to have this great saying, right? If you like your business and it's cruising along, break it, right? Break it before somebody else breaks it on their time schedule, not on yours. When you're ill prepared or not ready to deal with that kind of controversy, go break your own business and ask yourself, if I have 5 good referral sources, if I have 10, if I have fortune enough, I have 20. Why couldn't I have 30? I can have 40. About a month ago, I had the good fortune. I have a client who's a huge prop tech that's backed by Goldman Sachs. And they're a services company, a technology and sales services company that underpins the top 2% of realtors in America to help them do their business every day, these big teams, right? I got invited to one of their annual conferences in Phoenix. They had 3,000 of the top 1.5% of realtors in America came to this conference for 3 days to kind of talk about what they were doing to bulletproof their businesses in today's environment.
Love it.
You know what I heard from them?
I'm ready.
I grew my team.
Yep.
Right? So I grew the opportunity to bring in volume. I widened the top of my funnel.
Yep.
I brought people in and said, look, we're going to be really disciplined here. If you're going to be on my team, you're going to be 5 hours a day dialing for leads. 5, not 4.5, not 4,
4.5.
not till you get bored, not till your finger hurts from dialing the phone. 5 hours a day, I'm dialing for opportunities, right? You don't want to do that? Don't join my team.
That's right.
Right? That's what we're going to do. We're going to be disciplined. We're going to follow up on every lead. It's going to go into the CRM. The CRM is going to drive our business. We're going to go out. And so start by broadening the funnel, bring in more pieces or opportunities or leads into the funnel.
Yep.
Work the hell out of those leads, in some cases to make only as much money as I made last year.
Yes.
Right?
Yes, but that's the punchline people don't hear.
And working on the premise that a year from now or 2 years, I can't predict exactly when rates get healthier, but when they do, I'm going to kill it.
Game on.
I'm going to kill it, right? Because I've already subsumed the pieces around me. I'm like a black hole. I sucked everything into me. Maybe I'm working for less than I used to.
Absolutely.
Right? But I still have a great lead. I'm working the biz. Everybody knows what's going on. Everybody's in sync. And that's how I'm driving my business. That's the guy or gal or team you need to be calling on as an originator. I know we'll get to some
we're going to get there right now because I think this is a perfect conversation because we're talking about pretending like you're brand new. How are you going to go out and build it? The landscape has dramatically changed in how agents run their business.
Yes.
And so you had a great stat on who's actually doing the business in real estate today. This is going to wake everybody up.
Yeah, look, this I got actually from a client of mine that is, let's just say, in the know around these pieces, right? In 2022, and I'll be interested to see the 23 data because I think the 23 data is going to be more severe around this topic. Let me start by restating what I said at the beginning. Everything in our business is changing. Everything in our referral business partners is changing. Right? So accept that fact. If you don't, if there's one thing you take from today, I'll assure you you're dead wrong if you don't accept that fact. Right?
100%.
So what's happening in the real estate business? The top 1.5% of realtors or realtor teams, right? We know that there's the Alec Hansen team, right? They got 10 agents, 12 agents working for them. This particular client has a team. I won't say the geography because I don't give any,
it's okay.
Insider information away. They have a team. They have a team in a southeast state that does 3,500 real estate transactions a year.
Insane.
Now, if you're the mosquito looking to stick your sticker into an elephant, there's an elephant, right? Now. So the top 1.5% of realtors in 2022, realtors and realtor teams, accounted for 68% of all sales in America.
70% almost.
Right? The top 2% accounted for 74%. The top 10% approaches 90%.
That's wild.
If you're an originator today, forget it if you're calling on the bottom 90%.
Which is gigantic.
Which is huge. There's like 3 million realtors,
it's unbelievable how many people that is.
If you're calling on the bottom half of realtors in America today, and I'm not begrudging those people, they're good people. They're still selling some real estate. But if you're calling on that bottom half, I don't care if you have the best price, you're the best looking originator who's ever lived, you've got the fastest service, you can close loans in 2 days, you can do all these things, you're killing it. There's no loans. In order for us in the mortgage business to be successful, somebody has to sell something. Right? Refis are not the path today. They're going to come back. Oh, by the way, when they come back, it's going to be short-lived because those 2 years of refis will burn out in 6 months. Right?
The whole industry will do it right away.
Right? Purchase is the future. For a very long time. Right? And so if you are calling on that bottom half, the bottom 60%, the bottom 70%, that same mentor who told me I had to go do a deal a day, also told me, look, here's the deal. You can call on people who are in real estate or you can call on people who sell real estate. Your success will dramatically improve if you call on people who actually sell real estate, often not the people who have time to talk to you because they're not doing anything.
They have no time.
Right? I got, oh yeah, you want to come in and buy me lunch, Alec? Sure. I can't
that's
afford
always a
lunch.
trap.
I can't afford lunch anyway, so I'm in.
lunch.
Right? It's the guy.
Just take me.
It's the guy who tells you to go to hell 14 times.
Yeah, or never answers their phone.
He's too busy.
You just can't get a hold
He's
of
too
him.
busy, right? And he's got 14 layers that keeps you from getting to him or her, right, in the process.
Yep.
And oh, by the way, in that room, at 3,000 agents, I don't know if I have the exact stat, but if I had to guess, 65 to 70% were female.
Interesting.
Right?
Yeah, no, I get it.
And so if your approach, you got to think about that.
Yeah.
And if I was running a sales force today,
Yeah.
and I actually am, people ask me all the time why I don't go back in as a CEO. Please look at the mortgage business. Why would I want to do that? Right? So it's a lot easier.
Some of us are still dying here. So
it's a lot easier to be an advisor.
Yeah,
right?
yeah, that's right.
And you can feel free to disregard my advice. But if I was running a sales force today,
yes,
I wouldn't have one salesperson working for me who wasn't data driven about who and why they're calling on those people, because we know they sell real estate.
Yep.
And how do we find that out? We go to an MMI, we swim upstream, we see what reps are calling on which realtors who are actually selling real estate in my geography.
Yep.
And those are the people I'm going to put all of my efforts to figuring out how to do business with, versus that other 50% who don't sell real estate and likely won't. If they weren't selling real estate in 21 or 22,
seriously, yeah.
How do you think they're doing today?
Yeah, exactly.
Come
they're
on,
taking a break.
That's it.
Involuntarily.
They're drinking coffee, right? And by the way,
you're paying for
I'm
it.
not knocking them.
I know.
They're good human beings.
Yes, of course. Or they have different priorities or 1,000
But
things.
this consolidation to the top,
yes,
I can tell you, Alec, is going to continue, and it's going to accelerate, especially given what's going on in the real estate side.
Yeah.
The real estate brokerage business is not a healthy business today, because 92 or 3% of all the revenue goes to the agents.
Yeah, a lot of,
right? That's why they're getting in mortgage and title and insurance and all the rest, right, for other sources, right? And so if your referrals are coming from realtors and builders is a different piece, right? You know, I've worked with Dan for a lot of years, maybe the best builder guy who's ever lived, right? The reality is that's a slightly different sell, but it doesn't change. You have to go where the business is. And then be skilled, work your ass off, work half days, pick any 12 hours you want.
I think work half days is the quote for this whole thing.
Yeah,
it's so good.
Right. By the way, I'm 68 years old. I'm still working half days.
Yeah, I
right.
know. Yeah.
And I have the good fortune enough to do this for a living. I like doing it, and you're right. I do have a passion for this business, and particularly for the sales side of this business. Yeah. And I like working on complicated things with people I like. That's my client base, and work is good for you.
I have spent the last 6 months compiling some of the most strategic and important information when it comes to housing and real estate. Sorry to cut you off there, Alec B. 6 months, deep research. Ooh, sorry to cut you off there, Alec B. Hansen. Guess what? Sorry to cut you off there. He's not there. And go find him. Our team hunting for rogue field reporter Alec B. Hansen. How's it going out there, team?
The heck are you doing here? I got away. I got a new job. I am done with you.
I'm gonna need to let you go.
Tough luck out there, Alec B, but it's good to have you back on the team. Now I'm Alec Hansen.
Well, there's some other interesting things here we got to unpack. So you mentioned purchase is the future, and everybody hopefully has heard that, I hope, a lot in their careers, because it's the only sustainable business. And there is a little hope, because you showed me something, and I want you, Mike, let's pull that slide up. There's a little hope on kind of what's going on.
There's a lot of hope. Yeah,
there's some things that people can, maybe look forward to in 2025.
Yeah. Look, let's go to the next slide that's in here.
Yep. It's coming.
There we go.
Technology. Oh, yeah. So I like this.
All right. So this is a really busy slide. So let me just unpack the slide for 2 seconds so the audience gets this. This is population estimate. By the way, I think I have to give John Burns Real Estate or John Burns Analytics credit for this slide. I'm sure I stole it off a LinkedIn post or somewhere, like all good data that you pick up today, right? In the process. This shows the U.S. population by age cohort by age. So, 33-year-old, 34-year-old, 35-year-olds, 36-year-olds going across, right? Yep. The color combination way over here on the right-hand side is the silent generation, right? Those are really the World War II crowd. As you can tell, those are diminishing pretty quickly as you move out into the age. Yeah. My generation, the boomers.
Yep.
I used to have a line on this slide that showed my age, and
showed you on there?
Yeah, it explained why I'm so depressed, because all of my age are dying off.
Oh,
at,
God.
10,000 a day or something, right? So the greens are the boomers.
Yep.
The boomers, for all of the grief we take from the millennials and others, we changed the world.
Yep, no doubt.
Whether we intended to or not.
I was going to say.
Right?
Yeah.
We bought houses, we bought cars, we educated our kids, we did all those things, right?
Yeah.
Built businesses, and drove the economy of the United States and arguably the world for a long time, right, in the process. And that's just a predicate to what I'm going to point out here. If you look up where the little circle is at the top of that little red line up there, think of that as a tsunami wave of population coming at the real estate, home building, and mortgage business in the future. Those two red lines with a line in between, that's taking the bottom half of Gen X, the entire millennial population, the single biggest age cohort ever in the history of the world, right?
73 million.
And the blues, which is Gen Z, right, younger than the millennials. You add those three cohorts together, and it totals 173.5 million population, which is 2.5 times larger than the baby boomer generation was.
It's crazy.
And what it represents, people talk about first of all, I believe demographics are everything. If you can find a demographic wave in your life and stand in front of it and let it roll over you, you'll make a lot of money. Selling whatever the hell you're selling, right? So demographics are everything. You have this tsunami of population coming at you, and people, the Gen Xers are different. The millennials aren't getting married.
Yeah, you hear that? You hear all the...
First of all, none of it's true. What is true is that those decisions are being made later in life than the boomers did.
Yeah.
Right, a lot of boomers, you take the generation before the boomers, that was my dad's generation. They got out of the war and got married.
Yeah. Oh, yeah.
No time to waste. My dad went in World War II in 1942 at 15 and a half years old. His parents lied for him to get him in the U.S. Navy, right? He got out, he got married. My
grandfather went in at 16.
Right, exactly, right? I know your grandfather's story. And so, people happened quickly. They formed families, they bought houses, they bought cars, they went to work, and that was life. Same thing to some degree for the boomers. The millennials are doing the same thing. They're just delaying. They're delaying because they want to enjoy experiences. They had a higher education level. They took time. They just want to enjoy life. Once they get married, and they do, or they form some relationship, household relationship, and once they have kids, what do? They buy a house. Buy a house. And then they worry about things like school districts and other kinds of things, right? Because now you got a kid. Now you're, that 2 a.m, Sunday morning pub crawl looks less exciting when your 3-month-old wakes up on Sunday morning, right?
That's fun.
Right. So all of a sudden, okay, that's less fun now. I gotta like adult now, right? I gotta do other things. I gotta adult. Point being is, I think this demographic wave coming at us, the next 5 to 10 years in our business is going to be stratospherically good. Why? We're underbuilt. People want to have homes. The millennials, I have 2 millennial sons that are 34 and 32. They're both homeowners. They think about homes and what they want in a home differently than I think about homes, right? They want to not buy a bunch of house. They want to still have money to have experiences and do other things. All great. They're just different, but in some very fundamental ways they're the same.
Of course.
And that wave is coming at the industry. And if you're here and you survive into late 24 and early 25, when I believe the market will begin to get materially better, you're going to have less competition. You're going to have the wave hitting you right on the beach, right? Rates will be I don't think any of us will see 2s and 3s again in our lifetime, absent some existential world event, pandemic, God forbid, the Middle East war, or
something catastrophic,
right? And then there's a fleet of safe U.S. bonds or something. But those are typically transitory in time, just like 20 and 21 was, right?
100%.
And so if you can survive, the big theme at the MBA conference in Philly 2 weeks ago was survive till 25.
Oh, God.
Right? Now that's a terrible, first of all, what a terrible bumper sticker, right?
Seriously.
Because first of all, you're in 23 and you're going, oh God, that's a long time. It's not a long time, first of all. Secondly, it'll get incrementally better. Particularly through 24, I believe. That's again Brian's view. And when it happens, there's going to be a lot less competition. However, our business, the realtor's business, the home builder's business, everybody's business is changing. The pace of change will continue to accelerate, and you'll have competitors then that you can't even fathom today.
It's going to keep moving.
So work half days.
Work half days.
Right? Drive your business with data, not by, I woke up this morning, I looked out the window and I sniffed twice and said, I'm going to reach out to this potential referral source. And I don't know anything about them. I don't know what they've done. I don't know.
I saw an open house sign. I stopped.
Do my products fit the houses that they sell? Right? And that kind of thing. Can I help them? Can I be a value add? And so when you think about when Apple launches a product, do you think they just kind of wing it?
Yeah.
Or do you think there's immense research by their marketing and their development and their scientist team thinking this is a problem that this product solves? And you look at all of Apple's advertising.
Yep.
They don't tell you features and benefits. They tell you things in your life that their product will solve and fix for them. You fall down, your watch will tell your spouse that you fell down and need an ambulance. Right?
100%.
That's the fix.
Yep.
So you got to be able to fix things for people in order to get them to give you their money. So anyway, this is
good. There's some
future.
hope. Yeah, there's a little hope.
This is the uplifting part of today's conversation.
Well, I like the next one too. Let's pull one more up. Where'd it go? There it is.
There we go. It kind of slides in.
So if you're audio only, there's a dinosaur coming through the wall.
T-Rex.
There's a T-Rex coming through the wall. So what the hell is this about?
Yeah. So people who have worked with me or for me probably in the last 15 years have seen T-Rex before because
of course
this is my favorite, to some degree, my favorite go-to metaphor.
Yes.
Right. And, I don't know how many paleontologists you have in your audience.
Probably very few.
I'm going to guess that's a limited number. So the reality is I put this up because most audiences, I've done a lot of like President's Clubs and Circle of Excellence events over the last couple of years for some of your biggest, some of your biggest competitors. Loan Depot never invites me, but that's okay. I'll get over it.
Hey, you're here.
Exactly.
We're starting.
I appreciate it. Seriously, I do. I've used this in almost all those events by way of making a point.
Yeah.
Which is, if you think about T-Rex, right? I always try to think about market dominators, right? You guys have been a top 2 or 3 originator in the industry for the last 5 or 10 years.
Yeah.
The company that Anthony built and that you guys all run today has been a dominant player for the last many years. You're really a pain in the ass as a competitor, I can tell you that. With that said, T-Rex for 300 million years, if you think about it, we're kind of like the number 1 market share guy in the world.
Yes.
Right? They went where they wanted to go.
That's right.
They dominated markets.
Yes.
They ate what they wanted to eat. They made little T-Rexes. Life was pretty good. Somebody from corporate showed up and they ate them. Right? So not a lot of grief.
Simple life.
Nobody gave them grief.
Yeah.
It'd be like, when your manager shows up and wants to talk to you about doing things different, if you could just make them go away, that'd be a good thing. That was T-Rex's approach to virtually everything, right? Any static, I eat you. Right? Okay, we're done now. Right? So, but here's the question. They had number 1 dominance in the marketplace for 300 million years. Have you seen one lately?
No.
Okay.
Well, I've seen some bones.
Okay, exactly. You've seen some tar pits. There's some up here in Brea, right?
Exactly.
Right? Not far from us, right? What happened? Yeah. Most paleontologists will tell you that some existential event in the world happened. A lot of people think it was maybe a meteor hit the world, changed the entire environment. Bad news for T-Rex. The animals that T-Rex used to eat and feed on were mostly leaf eaters.
Yeah.
When the leaves went away, those animals starved and died. T-Rex, nothing left to eat.
Yep.
Unfortunately, T-Rex had a brain the size of a walnut.
Yep.
He was not necessarily known as an evolved guy.
A thinker,
right?
a real thinker.
Right? A strategist who would go, man, everything around me is changing. Perhaps I should change. Maybe I got to find other things to eat in the process. T-Rex died for a lack of an ability to evolve his approach to life.
Yep.
So how does this match to the mortgage business? Everything in our environment has changed. Yep. Everything is continuing to change at an ever-increasing pace. And my question to originators when I stand in front of a room of 300 top originators at a Circle of Excellence event on one of the islands, are you T-Rex in search of a tar pit? Or are you evolving your business? Which is it? Because you can't have it both ways.
Yep.
You can't say to yourself, I'm going to just keep doing things the way the things that got me here are going to keep. Now, you don't abandon those things if they're still working for you.
Yeah, of course.
But I'm back to how would you evolve your business if all that went away tomorrow?
Yeah.
Can you evolve? Are you thinking data? Are you thinking as an originator today as the CEO of your own business?
Yep.
Are you thinking about how you're marketing? Are you thinking about data? Are you thinking about how you're converting?
Yep.
Do you know what your economic value to your company is? There's a lot of work that's been done. I give Dave Savage a lot of credit around this piece from Mortgage Coach.
Yeah.
He and I gave a talk. We were down at Housing Wire together,
this.
right?
Yeah,
right.
I saw the talk too.
And so this concept of Moneyball mortgage, if people have seen the movie Moneyball, right, changed how baseball and how a lot of sports are played today by using data, not just gut intuition to pick talent, to pick players, to tell somebody, look, take the first pitch all the time because it improves your on-base percentage by 22% or whatever, right? Hit from the left side. It improves your percentage, right? And you put all these pieces together, you got a winning team, right, in the process. So this concept of using data to drive your business and to understand the economic value. So what Dave and a gentleman by the name of Jim Deach, who runs Terra Verde Partners, another consulting firm that does a little bit what I do, but actually Jim is much more evolved on the economic side. He's a ex-CPA, works off the East Coast. This concept of understanding if you take all your originators in your company today, and do you know which originators are making you a profit and which originators are detracting from the profit they made? Because they've got a lead funnel that they don't understand the cost of pulling credit bureaus, of lead cost, of lack of conversion, of price exceptions. And, what I observe in the originator core, and this will sound like a little bit of a knock on originators, and it is, by the way, when I've overseen, I've had the good fortune to have about 45,000 originators work for me in my career. People only ask for price exceptions in whole quarters. Can I have a quarter? I need a 50. I need a 75. I need a 100. I need a 150. As opposed to, how much do we have to beat the competitor by before the consumer will agree to do business with you? Is that $100?
Different question.
Is it $200?
Yeah.
And so the PE or the price exception might only be 0.003397%.
Yes.
And the buyer will agree to do business with you. Let's give them that concession as opposed to adding another 75 basis points just so I smother the competition and I beat them by a half. You don't have to beat them by a half. You got to beat them by when the consumer says yes to you.
That's right.
Right? That kind of data analysis, and if I was an originator working for you and you were my branch manager today, I would take the time to understand my economic value to your P&L when I'm negotiating PEs with you.
Of course.
When I'm talking about which clients I'm retaining and how you're keeping the other guys off them. About my commission rate. About my value to you as a branch manager to earn an override on me and to the company. I would figure that out on what my economic value is before you know it. Data. Evolve.
All right, so I got a few more minutes, and I want to do something here because we're talking about evolve and we're talking about loan officers, but I want to go up a level to leadership. Because I think that as we deal with a market like this, leadership is also crucially important. That and the evolution of leadership is crucially important. And I remember in the early days of my career, a hysterical phone call that used to happen on Fridays. That was called the Brian and Dan Show. And do you remember these calls?
Yeah, like I've got the scars on my back from them.
No, hold on.
First of all, I had to carry the Dan part, right? That was.
Here, Dan, come here.
And the best part of that was, how did we get through it without a couple of jokes such that I couldn't stop laughing long enough to finish the call? So I could always rely on the Dan part of the Brian and Dan Show.
Usually the Brian and Dan Show was Brian pissing him off and me trying to make him feel better.
Exactly.
So I thought this would be hysterical to get you two guys here for a 5-minute deal at the end, because this is a very hard time for leaders.
It is.
We talked about this, and we'll get rid of the dinosaur and we'll put it. This is one of the craziest markets mortgage people have ever faced. It is unknown and unknowable to a degree. People don't know when it's going to end. You have mass exodus of loan officers, people in pain, companies in pain. What advice do you guys have for leaders to deal with this?
Yeah, look, first of all, everything that we've talked about, in my view, applies up the scale. Meaning up the strata of whatever leadership or number of layers you have in your company. By the way, just as a side note, I think you're going to be very cautious about the number of layers you have.
Fair comment.
Right? Because look, originators, good originators who really understand their own economics, understand the economics of the business as well.
Yep.
And they've figured out that if you have 9 layers between them and your CEO, every one of those layers is getting a piece of the action in terms of a bonus or an override or whatever the case may be, something. And those pieces are packed in your price.
Yep.
And now I got to go compete against Billy Bob Broker. And by the way, I love brokers. Brokers are great people.
Sure.
I have a lot of friends who are brokers today.
Yeah.
But that broker may decide today to work for $300.
Yep.
Right. And now you got to compete with that person in that process.
Yep.
So one, I think all of the fact that everything in our industry has changed and continues to change, and change is evolving at an ever increasing rate, applies to the entire leadership strata as well, all the way to the CEO's desk. And I think Frank's done a phenomenal job.
Yeah.
There's a lot of really good CEOs in the industry. They're doing the right things. But recognizing, Dan, you weren't here, I don't think, when I said this, but if I was the head of production today, I would be so data driven by assessing my sales force and understanding who they're calling on and why, down to the last originator. And I think historically in our business, we've looked at a W-2 or a production report, sniffed twice and said, yeah, you're for me, come on board. Yeah, you're hired. Now find out who they're calling on.
Yeah.
And is that business likely resilient such that you then hire somebody, but their referral partners are dying at an increasingly rapid rate, such that you end up 6 months from now going, what the hell happened?
Yeah.
Right?
No
Why
business.
is that happening? And so this lack of use of data befuddles me, given that the data sources are so vibrant today. I spent a little time with a number of these companies, probably the most time with MMI, and I'm not promoting MMI other than I've spent time with them in this process. The ability to see who's actually selling real estate, and as my sales force calling on those people, I think I have a better shot at getting a triple or a double than I do if they're not selling real estate. I don't care how good I am. I can't do business. Right? So data evolving. How are you keeping your sales force in? What's your culture like? Right? Are you cutting by drips? Which I think drives a lot of people nuts because they don't know if they're next, right, in the process, right? I give your organization a lot of credit. I think you guys have you kind of tried to get to where you needed to get to. It's painful, I'm sure, painful for a lot of companies. But my advice is kind of the same, just at differing scale, right? Data, evolution, recognizing what's happening, seeing the demographic wave that's coming, and understanding the pain of your sales force that's out there. I think there's a lot that's changed. The flip side, I'll come back to my favorite 4-letter word of work. That part hasn't changed. And that's true at every level. In the companies that I see, clients that I have that are profitable this year, that were profitable last year, they're fairly flat. They work their brains out. They've taught their sales force how to sell discount points. Right? In a market where discount points are like a new set of vocabulary. Like, what the hell is that? Why can't I just PE in the way? Right? Now the company's not making any money. And by the way, I'm a net detractor from your company's P&L as an originator. I don't want to be that. I've had a view since I started in this business that the best friend an originator can have is to work for a profitable company that can invest in technology and marketing and tools and all of those things, and branding and all those things. It's very hard. Bad things happen to good companies that don't make money. It's that simple.
For our audio listeners, so Dan Hansen walked into the group, and Dan and Brian have a history together. That let's just leave it at that.
Yeah.
And I wanted to end.
Let's leave all those stories out.
We can. That's a whole nother podcast.
Yeah, your audience isn't old enough to hear those.
I think I'm still on parole. I'm not sure, but I listened to what Brian said, and of course we see things very similarly in our experience over the 40 years we've been around. The pressure that I feel that leaders have to understand now is the stack isn't what caused waste. What causes waste is the stack that doesn't do anything for originators.
Doesn't contribute. Or help to conversion.
Right.
Yeah.
I mean, you look at the difference of conversion by originators against leads, unbelievable.
Yep.
Right.
As long as high converters aren't getting there with a 2-point price exception on every loan, right? This is not a business where you can work for cheaper and make it up in volume. Doesn't exist.
So if you're one of us who are leading a sales organization, whether you're a regional manager, branch manager, division manager, it doesn't matter. At the end of it, you look down and you say, what am I doing every day to make my salespeople more productive? Are they calling on the right people, to Brian's point? Are they looking at the data? We have all that data. Trust me, we have the most robust data I've ever seen in my life.
Right.
The problem is our ability to train originators to rethink, especially after 2020 where they lost all their purchase muscle.
Yeah.
And, they got so tired dragging fish in on refinances that now they go, well, I got to calling realtors again. I don't want to do that.
Right.
I go, yes, you do.
This business is a lot more fun if you can just pick up the phone every 9 minutes and make 10 grand.
Exactly.
Right. It's a beautiful thing.
So it puts a lot of pressure on leadership to be relevant and to be valuable.
Yes.
Because, when I work for somebody, whether it's, a president, or I work for Brian, or I work for someone else, if I'm not growing and getting value, I agree. It's a weight as opposed to a life jacket, right?
Yes.
And I need that.
Yes.
So those of us that are all here on this podcast, and many of you are all great leaders. I've worked with so many fantastic leaders. Yes. If your day every day isn't about how do I get greater productivity and help my people focus their time and grow their business and be happy in an environment where they can see success from the value I bring to them, I got to get another job.
And are you leading from the front? Are you putting your actions and activities where your mouth is in the process, right?
Correct.
Are you leading that process? And I think, look, I had somebody once tell me a long time ago, right? When you look at great leaders, it takes two things. It takes somebody willing to lead, do the hard work, do the work those half days, right? And secondly, the crowd has to be willing to follow. And that's driven by the fact that crowd's willing to take a bullet for you. And if you are leading a group, and you're not confident that your folks are in your corner, you have to rethink your approach, right? Because that's the people that get picked off. That's the people that recruiters are out there killing you on right now, talking about the fact that you're not adding value. And I couldn't agree with you more, Dan. It's not about the relevant stack or the number of people. It's does that stack add value to the enterprise every day?
Right.
We have a lot of people in our industry that retired 5 years ago and didn't bother to mention it to anybody. They're still in the job.
They're still there, sitting there.
And they're unwilling. I've had people say to me, man, my company is calling me up and they're telling me I got to make more cuts. And they don't like my answer because my filter broke a long time ago. And
you had a filter?
One time I did. And I just say, well, let me ask you this. Why in the hell did your company have to call you up to tell you to make the cuts that need to be made?
Oof.
Right? That's proactive leadership. That's owning your job,
business,
right? Owning that. And people respect it when you step up to your obligations. They don't when they think you've retired and maybe what you're doing is out looking for another big check somewhere on the premise, well, I'll bring my crowd with me and I'll do those things.
Yeah.
It's a mistake. It's a mistake. Step up and deliver.
So
good things happen.
Final commentary with you two guys. Dan, I'll start with you. Message to originators, message to leaders. And you didn't hear most of what Brian said today, which is great. It's fine. So you're coming in with a
I only
blank slate
a few times.
Yeah.
Get in line.
What's your message to leaders today and how to navigate this market? What's your
look? Leaders have to build equity with the people that they serve. Building equity means how am I going to make these guys happier with their lives, get through a really rough time, make them optimistic about the future. You got to give people a vision that, this isn't the rest of your life. There is going to be another life to live. But we got to get through this one. There are transactions being done.
Yes.
And some people are doing a lot of them.
Yes.
Some people are ignoring the fact that nobody wants a HELOC. Yes, they do. They're doing it downstairs every day. So leaders have to accept the responsibility of leadership, which is very difficult. And that's why you've been made a leader. Is that somebody saw in you the ability to inspire other people, to help other people get ahead in their lives, and to get through these kinds of times. You don't need a leader in 2020. You need a big net, and you need a lot more processors and underwriters, not more leaders. So this is one of those experiences where, by the way, this is when equity is forged. Because when the market does come back and they saw where you were with them when the bullets were flying over their head and they're in the foxhole with them, trust me, they're going to be with you when the good times are there, bringing back 3 times the revenues they do today.
You just mentioned foxhole, Dan. If I could just tee onto that comment. You look at this country's highest honor of the Medal of Honor. There's not one Medal of Honor winner who was sitting in some division head office in the Pentagon when they got awarded the Medal of Honor.
No.
You read these scripts. These are people that were in the foxhole, who went above and beyond at their own risk, went out and did these heroic things under immense duress and fire, right? Get in the foxhole. Be out there and show people you're in the fight with them, and people will follow you in a lot of places and through very difficult times.
Yep.
You sit back and you try to be detached from it and think, well, you know what, I'm a corporate executive. I don't have to get my hands dirty on this kind of stuff. it's the kiss of death.
Yeah.
Kiss of death. People get pissed.
Yep.
Pissed. And they wonder, what's your value to me?
And they leave.
And they either leave or they might as well leave because you don't mean anything to them, right? I mean, they'll listen to you and they go, yeah, whatever.
And I would say at a company like ours, as leaderships, and a lot of our people do this really well, we give a lot to our originators that may not seem like a lot. We keep the technology moving. We keep it growing. It keeps working. It doesn't break down. Why is that? Well, that costs money. It costs great people. We have a program. We put over $1 billion in leads out this year that were funded by retail originators through DPLP. I mean, companies don't do that. So our branding, if we had a marketing director, we'd really be somewhere.
Jeez.
But at the end of the day,
I'm glad I did this. This is my own fault.
At the end of the day, guys, we offer a lot corporately that we take for granted, and we don't recognize the value it really has until it's not there. If you're in Encompass right now, you realize you're getting charged a lot more than you used to for that product.
Yes.
Why? Because you have a limitation on volume. That's right. We own our own technology. It costs us millions and millions and millions, and Anthony put that money out there for a reason, and that is to control our destiny by controlling our tech, which costs a lot of money. And so I look at everybody and go, yeah, I know everybody looks around and goes, these layers, and it's really tough, and the pricing. Guys, it's about value. What value do you bring to the table? What value does your company bring to the table? What value does your boss or leader bring you to the table? There are people, and I actually think, and I'm going to make a prognostication, which I never do.
Really?
Yeah, because it's always wrong. But we're 90% down this pit, and there may be a little more darkness in front of us, but there's a lot more light in front of us, in my opinion, today than I've seen in a long time. Now, does that mean it's going to be an easy year? Hell no. It's going to be brutal. Right. But it's brutal for real estate agents. Home builders are making it work because they can buy down the rates with their equity and they got capital to do it. That's what's moving in this market. I think we're going to see, and I don't know when, maybe it's third quarter, it's an election year, could be goofy. We are definitely headed up as opposed to down by the middle of next year. Now, I don't know what that means.
I couldn't agree more.
Yeah, I don't think it's going to be 3%, 4%, but I'm telling you, the market's going to smell 5%.
Yeah.
And then when they do, activity's going to start being more aggressive.
By the way, the bond market's going to be way ahead of the Fed.
Totally.
The minute they realize it's over, it's done. And I think the market feels that way today. I hope they're right, by the way, and I think they are. But who knows? There's some things that could happen that drive it the other way.
Yeah.
But yeah, I couldn't agree with Dan more on this. And look, you talk about all the things you guys do. It may not seem like a lot until you don't have them. Go some other place.
Yeah.
Right. That doesn't have those things. And look, it's very simple. I have, as you guys know, I work both for some of your competitors and I work for a lot of different companies as a consultant. The folks who are making money, keeping their sales force, keeping their culture alive, are doing it through sheer force of will. I see CEOs that, I get emails and phone calls from them at 3:00 Sunday morning because they're on the job thinking about how do they hang on to their folks? What do they do differently? What risk are they taking to try to help their sales force stay in the game? Right. That's what it takes at every level, to your previous point, Dave.
Yeah. Well, so Brian, hit me with this as we close here. What after all this conversation from the foundation we laid to kind of what's the changing in real estate and all that world today, what message do you have to originators out there?
Well, I've hit on some of it, right? I started, you weren't here, Dan, at the beginning. I opened the beginning by saying this is not going to be the uplifting part of today's conversation, right? We went through some charts.
Well, that's when he called me.
Yeah, exactly. Get in here, man. Get in here, right? So we started by, one, you have to accept the reality of what is,
I love
right?
that.
What is, right? What's actually going on around you. To Dan's point, there are deals getting done. There are transactions getting done. If they're not happening with you, then you got to figure out why. Right? What's happening with your referral sources? Do you know what's going on in your business?
Data.
Right? For 40 years, I've worked with Dan on a lot of these through the years. If you were forecasting the next year, you went back and looked at your historical data. You looked at your margins. You looked at rates. You looked at variables. You looked at your cost structure, pull through, blah, 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 product mix, and you forecasted forward. This is one of those few exceptions where none of that matters. None of that matters. You know what matters? What's going on in your referral sources business today and for the foreseeable next 6 to 12 to 18 months. That's what matters. And if you haven't calibrated what you think you're going to do against that, you're missing it by a mile. And that's been the whole problem in the industry for the last 24 months. People kept saying, no, I had a client, it was an M&A client, kept looking, saying, no. We've looked, and over the last 5 years, our margins were 454 basis points.
Amazing.
That's great. Really good data means nothing. means nothing, right? And so if you're forecasting forward based on some historic thing,
it's gone.
It's gone. It doesn't exist. So tell me what's going on in your referral sources business, and now tell me how much volume you think you're doing. And if that suggests that you're going to be at 146% market share of your clients, you might have miscalibrated, right? That means you're getting 1.5 times more than they're actually doing. Okay, that's probably not going to work out, right? So maybe you should recalibrate.
Yep.
What's the impact to your cost? What should the impact be to your margins? Where are you on fees? What's your comp structure? Does all this make sense?
Yep.
And oh, by the way, how do you keep your sales force in the game and motivated every day to go out there? One way is to help them find where those opportunities exist, right, in that process. So look, I said in part of the conversation, I think the next 5 to 10 years in the business, from, to your point, Dan, mid to late 24 on, is going to be exceedingly bright. You guys are in the joint venture business with a lot of builders. I think it's been a brilliant stroke. I suspect those businesses are doing very well today, right? Mm-hmm. And companies need to be diverse in that respect. Hard work, data-driven, evolve your business, work really hard. I think social media is a big part.
Yeah, sure.
But as I said to you when we were sitting in your office, also I get nervous of people who end up playing with their camera for 7 hours a day.
Yeah, I mean, those,
right?
so that's people hiding from the work.
Yes, exactly. That's like, this is cool stuff. I love, I'm a technology geek myself. I like playing with stuff. I was taking pictures of your equipment because I thought, Jesus, this guy's got really good stuff, right? But that's not where actual revenue is driven, right? That's not where deals come from. And so you've got to do that so you can be relevant. But then what are you doing the rest of your time? And you can do your own calendar assessment. What time did you put in? What did you get as a return? Is it working for you? If it isn't, you're the CEO of your business as an originator.
That's right.
Do the analysis, make the changes you need to make, and
do the work.
The only thing that matters is reality, right? You it can't be how you wish it was. How is it? Work from there.
So Brian, where can people hang out with you? Where can they get your information? Where can they get your insights?
Yeah, look, I have a newsletter that I publish in LinkedIn.
Great.
Every Monday it comes out. It's free, by the way, so it's really expensive. It's really good content. Actually, if you're a subscriber, and so my website is mortgageap.com, Mortgage Advisory Partners, mortgageap.com.
Good. We'll drop the link.
Is the website, right? And I can get you an easy button link. You can subscribe to the website, or you can subscribe to the newsletter via the website. You can see anything I do or publish. All the articles I'm quoted in are all there as well. Other interviews like this. I did the Moneyball interview with Dave down in the Housing Wire conference. That's up on the website. So people can see me there. We're thinking about actually launching kind of a weekly confab, a mastermind, where I give some thoughts on the market, bring people in to help people think about how to improve their business. More on that to come. But frankly, the newsletter subscription has just exploded over the last couple of months. And so, as I said, it's free, and the subscribers get it 3 days early from when I post it publicly. That's probably the best place to go. And then if on the website, there's ways to connect me if people are looking to hire my organization. It's not just me, by the way. I have project managers, financial planning and analysis folks that handle benefits, folks that do offshoring, folks do a lot of things that are available for companies. Normally, I don't do it at the rep level or the branch manager level. But here's what I do. Because I've had about 45,000 reps work with me through the years, I talk to an awful lot of reps every day, every week. People just reaching out. They're thinking about making a move. They're thinking about doing something. They want my opinion on it. And so I'm available. My cell phone's up on my LinkedIn site.
Thank you for all the insight today. It's been an absolute pleasure. And for our listeners out there, go subscribe to the newsletter, get involved, find out what's going on, get in tune with the market that's moving around you. Don't be a victim to it. Be responsible to it. And we heard it from Brian today, evolve. Don't be the T-Rex in your business anymore. We'll see you guys on the next episode of the Model Lending Podcast.